Hey everyone, I hope you're doing well. So we're here with another content about the most recent high-low. So I think that you have heard that I have talked about most recent high-low in my videos. So to clarify more, I wanted to just create one step-by-step tutorial for that, so that it clears up some confusion you may encounter. So most recent high-low, or MRHL, so are labels that they are break-even zones for traders and loss. So break-even zone. So to understand it, I'm using the concept of stairs. Okay. So let's imagine that the price is going up like this one. Okay. Consider these are candles. So these are highs of the candles. Okay. And when you're just coming down from these stairs. Okay. Then here we have other stairs, which are also candles. These are highs and lows of the candles. So when we're going from in the downtrend, we're going to just compare the lows of the candles from the previous low and this one from the prior one, and so on. When we're coming from the coming backwards from the bullish candles, bullish trend, so we're gonna do what? We're gonna just compare the highs. So in the bearish ones, we're gonna consider low, and the bullish ones, we're gonna consider the highs. So with the prior one, okay? Now, what happens? Now, if you're coming from the last existing candle on the chart, current market, so you're going to compare highs of the last candle with the prior one, okay? And the last of this prior one with one more prior one, and it goes on up until you get to the bottom of this let's call valley. Okay, so what happens here when it's coming down, you'll see that afterwards we have what? Break even for sellers. What does it mean? So we have some of the people that here they wanted to sell. Okay, now what happens later on? Their positions are in drawdown when the price goes up and up and up and up. So what is the use of this concept, and how can we use it in our trading? The point is that some of the institutions that they cannot use a stop loss, and those that they're responsible for driving the market up and down. So their positions, some of their positions are in drawdowns. Don't think that they are genius. They're ordinary people like you and me, and they're making mistakes in their analysis. And there is nothing. We have no perfect analysis that gives 100%. Right. How are they going to cover their drawdown? The point is that they're going to inject market and do some manipulation to drive the market down to this level, so that they can be they're able to close some of the positions that they have in loss. And not only that one, they are just closing their actually positions when they're driving the market down, because they're in need of some other, if they're selling, they need some buyers, right? So that's why they try to drive the market down up until this level, and you'll see that on the chart in the live market, and I'm going to show you. You'll see that the price usually, okay, bounces from these levels if they reach. So in the opposite scenario, if it is the valley, if you want to go and analyze the peak of this, the opposite direction. Now look at this one. Now we have a bearish trend, or bearish leg, let's say. Bearish trend is not a good word for this. Bearish leg, okay, inside the trend. So as I told you here, we're going to compare the lows of the candles. We're just starting from the last current candle that is already closed. We cannot use the candles that their time is not finished, the packaging, their measurement is not finished yet. So we're going to use the candles that they are closed. Now the lows of these candles will be from the downside. Okay, we're going to just compare the lows of these candles with the prior ones. So what happens when we're doing this one, when we're comparing this one and we're coming upwards, so we're going to reach to the end of this one, which is the peak, okay, peak of this swings, let's say. It's okay, turning point. Now here, if we go up, we're going to get to the break-even point, or it should be what? It should be this one were sellers, this should be buyers, right? So buyers, why? Now here, let me put also this one in blue, okay? So the people were buying here, the same scenario happened to them, okay? Now their positions are in loss, throw down, throw down, throw down. So they're gonna drive the market up until it comes here, right? So this one, okay, it will come. They want to drive market backwards to this point again. And if this one happens, they want to drive this market down to be in a good position, to be in the break-even zone, okay? Now let's go to the live market, live chart, and you'll see what is it like in the live chart. So now here, let's imagine this is our last candle, which is printed, and it is finished, okay? The close of the market happened. That's just right. Now let's consider this one is 5 minutes candle. So let me make it in a way that you can see that, okay, interval and a description. This is gold one, and it's 5 minutes. So now let's just assume we just arrived to the market and we're just going to analyze it. This is the low of the candle, as you see. Okay, this is the high of the candle, last candle. Let me make it a little bit. Okay, so now let's go, and here you see that this is the low of the candle. Now let's compare the low of the candle with the prior candle's low, and this one with the prior candle's low. So far we have this consecutive low after low. Okay, but here when we are comparing this candle, we're expecting the candle's highs to be up, but we don't have it. What happens? This is the low of the candle here, right? This is most recent high low or break-even point. So what does it mean? Before, you see here we had this movement up, right? These were not printed. Let me go back to that point on the chart. You can see so what I mean, really. Okay, now here that we are, so people that they are looking at this one or whatever strategy they're using, they're assuming that the price will move upwards. Okay, so and although we have some hinders here, but they're assuming that okay, it will go up. But what happens? Their expectation and their analysis proved wrong. Okay, now here not only didn't go up, their positions are in what? In very huge loss. Okay, now right away, when they're breaking this one, look, I mean this low, okay, their positions, okay, you can just mark this one. I'm going to do that in the next bars replay. You will see that how it works. So now as you see, they try to drive the market up until they're coming to what? Break-even point. Okay, so sometimes they cannot do it, but later on in the future, finally they will do that. And here, let's see, again, it is going down. It was closed here, okay, because it's bullish. Later it went up, but again, it couldn't sustain the move upwards. So now we have this break-even here. Okay, you could just analyze this one for yourself. So now, let's see if we have anything like that. Okay, now driving the market up until it gets to the almost there. Yeah, look, okay. Okay, so again, the same story. Now we have these swings. Okay, this low is broken. Okay, here. Now, when we have this broken, we're going to compare the lows again. Low, low, and this one is our most recent high, most recent low, which is break-even point for these actually buyers. Okay, so that they are in loss. Okay, when they're, for example, these people here bought. Okay, so they wanted the price to go up. Okay, or some people bought here or there in the lower time frame. Now their positions up until if it was there, okay, their position was in loss, okay, in drawdown. So now let's see what happens. We haven't filled this one yet completely. To make it a little bit more practical, so from, as you know, how do we drop from this one leg to the first base drop here? Okay, we're looking for in the base here if we have, or from 5 minutes we go to 3 minutes. Okay, so we're going to readjust this one in the lower time frame. It is not necessary, but if you want, you can do that. But here we are in 1 minute. Okay, so now we're going to have something which is aligned with our line, which is very, very close to most recent break. High or low or break even. So this one could be considered because we have this, right? So let's assume we have this, or some people could assume we have this movement, which is this one is QM level. Okay, so which one to consider? Okay, so the reaction here, the PA here, will tell you what. So let's assume that okay, you were considering this one, okay, this upper one. What would happen to your position? For example, you would not consider this one. You'd say that okay, I'm going to get this one. Okay, right? So here you wouldn't get inside. You wouldn't be tagged into the trade. So you would be waiting here like this or that. Okay, so you wouldn't be tagged in the market. So if everybody would know that for sure that price will come here and will bounce back from here. Okay, so you wouldn't risk like 5% or 10%. You would risk 50% of your liquidity, I mean your balance, your capital, to make more. But because of the probability, we're just having the low risk. So first survive, later grow our account. So some people would consider this one. Okay, they would be tagged into the market, I mean trade, like here. Okay, sorry, we should have put sell position like here. Okay, so if they would put their stop here, or if they're conservative, their stop would be here, and depending on their fixed risk or reward, okay, fixed RR or whatever their exit strategy is, they would be out, or they would be waiting for having 2 or more R. Okay, now this most recent high-low concept, or it's by itself, is a complete thing. Okay, so you can just use this most recent high-low by itself, or you can just refine your level by using this complement system. Okay, so now let's move on. And my concern is not just teaching you how to execute trade now. I'm just trying to help you understand when traders are in actually in drawdown or profit, how they behave in the how they create this movement. Okay, now let's go on. If it goes up or down, let's see. Okay, went downwards again. So here, yeah, it is still downwards. Okay, now here we had a slight up movement. So when we have the first up movement and later break it itself, let me show like this. So we have this one, although it is inside bar, but it went down. Okay, so it is a movement. Okay, it is a U-turn for us. So we want to just identify that U-turns for us for the future. So now here it wanted to go up to this break even, and also here also it went to a break even once. Okay, later the second time. If you go down to the lower time frame, step by step, by the way. So here is our break even point. So we don't have very significant thing that we can draw. Or we don't have a lot of candles overlapping or coinciding. So here you may say that, okay, let me refine this zone to this V shape. And also this one is the movement like this. So here, which could not only, okay, this is our movement. Okay, here it could hold the price down. Okay, we call this one FLs. So real zones. Okay, so not all of them are going to hold the price, but most of them do. They're stronger than FTRs that we have learned in our master class. So here we're expecting the market to just keep the price down. Okay, but when it is at the break-even level, okay, the chance of keeping it down is better, more. Why? The point is, logically think that you are in this position. Okay, you wanted to buy here, right? You think like you see something here in front of the market based on different strategies in front of the price. You want to drive. You think that, yeah, it's going to go, okay, and be something like this. Okay, but it didn't happen. So now your position is in the loss. You were expecting to have this scenario like this. Okay, so but it didn't happen. When your prices the price is coming down until it comes to your stop loss. Okay, this is the maximum pain level you can consider. Okay, when it is coming back, and when you are here, you say, oh, okay, you feel like you're relieved. Okay, you say that, okay, let me just get out of the trade. Okay, it didn't work out for me. Okay, so that's the reason it works. Okay, logically and emotionally, if you consider this. Now let's go to back our original time frame, which was 5 minutes. So here I'm just helping you to utilize lower time frame as well and how to utilize them. So this is again, so this break even is retested now. Okay, here up until this level, the lowest level is not broken. We're not doing anything. So here now, here it is broken from downside. We're considering this low from the it's lower than this step. This one is lower than that one. That one is, this one is lower, and this one is not. Okay, now if you want to refine, you can go to the lower time frame here. Okay, you cannot see inside the candles from this time. Okay, so now in 1 minute time frame. So okay, yeah, if you want to refine it, you can do that by, let's say this is your zone. It has proved that it is strong and it is driving the market down strongly. So also if you remember in 5 minutes when we had engulfing, you know, it is not only break-even zone, it is also engulfing. So when we were just marking this engulfing zone, you remember that? Okay, so the first drop was very important for us. We don't have anything in the first base. Okay, there is no base inside this one, but here, so the upper one here is an important place for us. This one, you remember this? This one was called base. Okay, so we're expecting that the price has some reactions here. Okay, sometimes it sweeps this one, and this one is a very good zone for us, for example. Okay, because it has strong momentum. It means that, yeah, some decisions are made here to drive the market down. Later on, it will react there, and because we have some unfilled positions, when they're trying to force the market down, they're putting more orders than it is needed. That's why some of the orders are not filled, so they need to just come back and mitigate and get rid of those positions that they're in drawdown, right? So that's the reason all the time price keeps coming to the place that it initially started. Okay, so in the QM, if QM is here, if you want to consider setups of the RTM. Okay, so when you're just taking it a little extending forward. So you'll see that the first entry point to this zone, okay, was this candle by using this candle. So we call this one, okay, this movement, this is what this is, decision level, or LSK. And the exit zone, okay, the part that the price decided to leave this zone, okay, they call it RS, okay. So if this RS could come back to LSK or DP point, they turn out to be, instead of RS, which is resistance and support, traditional one, we call them swap FL, but this didn't happen here, right? So our zone was here, the low of this QM is here. It exited from here, right? Let me show it. This one is, it came down and finally it came up. So this is called swap FL, okay? But you don't need this stuff, okay? You don't need this stuff. These are for confluences. These are setup based RTM, okay? Now let's go back to the higher time frame, okay? Higher time frame. Now, okay, this is our break-even level, right? And this is our DP level, if you remember, okay? This interactions happens in the lower time frame. Yeah, here we are. So, and the price dramatically, okay, react to this one, okay? So the price action should be called price reaction rather than price action. So now let's go backwards to the, original time frame. So we are here. So the reason that sometimes RTM traders are having huge R is not because they're targeting huge TP, while they're reducing their SL, okay? So they're considering this zones, okay? They're just saying that, okay, maybe it will come here and react from there. Okay, they are analyzing it. This one is swept by, and afterwards they're saying, okay, now here we are. Now again, they're going to inside this zone. Let's say this LSK, okay? Again, they're narrowing this zone down, okay? So when they're narrowing this zone down, in, let's say 15 seconds time frame, or 5 seconds time frame, or so on and so forth, later they try to pinpoint the exact entry point that they want. Okay, I'm not going to do that for you, but be sure that there is something happening inside this LSK. So because of fractality of the market. Now let's go to the other point. So when do we change it? Okay, did we change? Okay, yes. Here, break-even point after this one, this level is broken even by a tick. Okay, although it is a sweep. Okay, so you can consider comparing highs of these candles, because it is in this leg it is bullish. Okay, so when we're considering the highs of the candles, this high is higher than this one is higher than this, and this goes up until we get to this one, to this level here. Now this is a break-even level, okay, for people that they wanted to sell. Okay, they wanted to sell here, and let me put that, they say, okay, this is our level that we wanted to sell. Their RR is not fixed properly, okay, and now their positions are in drawdown here. So the price came back from seller's point of view, came back to their break-even level, the level that their position is getting out of drawdown, and they're in break-even zone. Okay, so some of them are getting out of their positions, okay, because of this stress, and really they cannot hold it back. Okay, so, and as usual, most of the people that they're finding the direction wrong after they're exiting goes toward their TP. So now that it is broken, the last one is here, okay, that is broken. Now let's go backwards and compare to lows. Again, we come to this point, right? So here, we are here. Let's see what the reaction of the price to this level is. Okay, mitigated, came back. Okay, again, this one was broken with this, so I should have done it a little earlier. So this one was broken. Now let's compare this thread, this one, and this. This is the most recent low. Now price immediately after it came down, it wanted to go up there, and maybe some orders here are used, up until here, but we have some orders here and maybe there. Okay, so now do we have the mitigation of that one? Not now yet. So now again, it is broken. Let me go backwards not to confuse you. So here again, now we have this most recent high low. Okay, now right away it is mitigated and went backwards again. I'm to go here. So okay, now here it is not broken yet. This one now This part is broken. Now let's go backwards. Low, low. This low is still lower than this one. This is our most recent high low. As you see, it is by wick. It shows the weakness of momentum as well when it is broken by shadow. So the tendency to go upwards in the lower time frame, you can see a V shape here. So now, okay. So this one is mitigated immediately once here, second time here. So because it was given one what do you say, opposite movement. So if it breaks it, we're gonna just have the new break even. So nothing has happened here. Look, up until this level, and this level is broken. Okay, we are not considering anything as our most recent high low, which has happened here, right? So let me show it exactly. This one here broke it. Okay, now let's go. This time we're going to count from, compare highs. High, 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 high. This one is not high. Okay, this is our break-even level. So mitigation. Wait a second, let me see if power replay works. Power replay doesn't work. Well, I don't know why. So, okay, this is the break-even level. Now, it is mitigated right away. But as you see, it didn't have enough strength to go upwards. So 2 times with the shadow, it is showing the weakness of the, buyers. Okay, they cannot move the market up. So now, let's go on. We cannot expect this market to go up. Okay, even if it wants it to go up, it should be like this, not like a rocket. So it should come down and, okay, yeah, like this one. So here, not broken yet, not yet. Okay, it happened here. So our break-even zone is here. Okay, so comparing the low, this is the first low, which is not, higher than the prior ones. So look at this moving average, shows the depth of momentum. Okay, we don't have this smooth moving average here as well. It gauges the momentum, as well. So if it is breached, so we're gonna just count, compare the highs. So I think you got the concept already. Now let me do some more without explanation. So you will see what I'm doing there. Okay, now this is broken. Here it is. Now this is our break-even level. Now we couldn't do anything up until here or here was broken. The price was in consolidation. Okay, so our moving average was showing that. Okay, now here we go. It should bounce backwards. So here up. So we cannot do anything up until this level, and this level, one of them is breached. Okay, here it is breached. So when it is breached, we're gonna count backwards from the up to down. Compare. So here is our break-even level, but our break-even level is in a place that the, it's a spike. So coming back here needs a little bit more energy. So here, if you go to the lower time frame, you can refine the entry point there. Okay, yeah, again, it broke itself. Let me put this. I don't think it's gonna hold the price up because we have some inefficient places that is not natural for the market to just move like that. The market moves like this rather than that. It is a consolidation here if you consider that's this one. So finally it will come back and get some unfilled orders that they are left here. Wait a second. Okay, so yeah, this is the low. Okay, it is breached. Okay, so this one and this one is the zone that the level that if they are broken, so we're going to change our bias. Lows are going to be what? Okay, compare. So just exactly right away we have some mitigation of the break-even zone. Okay, internet has, okay, yeah. Okay, yeah, this mitigation is full. So let me get rid of this one. should be here. And because our break-even zone is here, let's put it there. So now if it's breaking this one, we're gonna just consider new break-even zone level actually. Okay, now done. So here, so this is our break-even level. Comparing lows, this is our break-even level. You see the momentum, okay, with the shadow, okay, stood with the shadow. So here, if it is breached, again, we're going to count it from up to down. I mean, highs, so. If it breach, not yet. This one, not yet. So let me put some lines there. So we have it under control. Okay, now it is breached. So right here. Now, this is our break-even level. Comes down here. Okay. Okay, again, it gave another movement, broke itself again. So here it is breached. Okay, now this is our break-even level. This time here. Okay, so you can find some a bit using engulfing and also these compliances together. You can refine a very good point for entry and even level. So not only that, here also we have another break-even level. Look, here we have break-even level. Okay, now we can go on and on wherever. Look, so we started from there and it went upwards like this. So I hope this education and this tutorial was helpful for you. So if you have any question, just comment it in the comment section or our group. Take care. See you then.